Hello friends, in this video, I would like to explain what you as an investor should look for before buying PSU stocks for your portfolio. We have curated a list of 5 best PSU stocks to buy, which are ONGC, Coal India, GAIL, NMDC and State Bank of India. This list of stock is for a longer term horizon, keeping several fundamental factors in mind. As an investor, this video will guide you to make your own checklist and research these stocks better. Firstly, a brief on PSU sector. PSUs are closely linked to the core sector of the economy and have successfully been able to build a strong industrial base in the country. Now, these undertakings are majorly owned by Government of India. Core sectors of economy such as finance, coal, capital goods, infra, oil, power, metal and mining play a crucial role in nation building process, which sets the tone of the economy in the right direction. PSUs contribute a good amount of money regularly to the government in form of dividend, excise duty, custom duty and corporate taxes. Now PSUs majorly get impacted by any changes in the government policy. How much stake the government intends to trim in the future may closely link to the fiscal deficit, which will always remain an overhang on these stock prices. In order to measure the performance of PSU, it is imperative to keep a close watch on indicators such as their share in GDP, capital formation, employment, etc. As an investor, it is of great importance to look at the industry outlook before picking up these stocks. When there are expectations of cyclical recovery in the economy, the PSUs are well placed to benefit. Factors such as free cash flow, return on capital and equity, competitive business advantage, scalability of business, and valuation should be the basis for making investment in these PSU stocks. Now let's look at a few factors in detail. Firstly, the top line and bottom line. The top line refers to company's revenue, while the bottom line is company's net income. It is important to pay attention to them for the signs of any changes from quarter to quarter and year on year. Any significant decline should be a red flag which would need a deeper look. Decent growth is what an investor should look for. For instance, ONGC, which is India's largest oil exploration and production company, has a top line CAGR of 19.33% and bottom line CAGR of 3.62% in the past 5 years, which is considered decent enough by PSU standards. Next we come to operating profit margins, and this is also known as operating income margin, which is a measure of how much profit a company makes after deducting its variable costs of production. Now every company, including PSUs, needs a healthy margin in order to pay its fixed obligation, which is such as interest on debt and taxes. A high and improving operating margin is an excellent indicator that a company is being managed well. Now GAIL India, which has a leadership position in transmission of natural gas and LPG, has tried to maintain its operating margins over the past 5 years in the range of 9 to 14%. Moving on to return ratios such as ROE and ROCE. Now both these ratios are used to measure the efficiency with which a company can generate profits. Now these ratios are of utmost importance, which should be compared with industry peers to pick the best bets. The trends of this ratio should be looked at to see if they are improving or not. You can see that companies in our model portfolio have clocked a healthy return ratios. Now the next matrix to look at is the debt to equity ratio, which helps to determine how a company finances its assets. Now too much debt can pose a risk to a company if it doesn't have the ability to consistently generate earnings or cash flow to meet its debt obligations. It is seen that all the PSUs handpicked for our model portfolio have low levels of debt. Now these companies will be able to conserve cash and reinvest or distribute them as dividends to exchequer and shareholders instead of paying interests. Now these cash reserves will help them to fight against uncertain and unprecedented times like this. Now coming on to a key valuation matrix, that is price to earnings ratio. Now this ratio can also help in understanding if a stock is overpriced, fairly priced or underpriced relative to the company's true money making potential. This ratio can be compared with the industry average to determine if the company is fairly priced. Let's take a look at our model portfolio. Now you can see that NMDC is overpriced when compared to others, whereas GAIL India has the lowest price to earnings ratio. Next is dividend yield. Now, dividends are the portion of company's profit that are distributed to the shareholders. It is important to find out if the company is going to be able to continue paying dividends during recession and bad times. As stated earlier, PSUs distribute a good amount of their money regularly to the government in form of hefty dividends. Taking a look at our model portfolio, each company pays a good amount of dividend as a percentage to its market price. Coal India's dividend yield ratio stands at 8.95%. Now, amongst the public sector banks, State Bank of India stands out on all parameters, which is also included in our model portfolio. The bank is superior on all fronts, namely profitability, net interest margins, control in formation of bad loans, that is the NPAs, share in low cost deposit, that is CASA deposit, provision coverage ratio, and last but not the least, inexpensive valuation when compared to other PSU banks. Now, if you want to know more about how to analyze banks, please check out our best banking stocks to buy for detailed explanation. Now, investors should be clear that when it comes to investing in PSUs, one cannot follow buy and forget strategy, as PSUs gets impacted majorly by any changes in government policies. Any PSU's future will depend on government's ever-bulging fiscal deficit and their disinvestment plans. The government is likely to announce a new PSU policy, which will focus on privatizing PSUs in non-strategic sectors based on feasibility. Now, this is a welcome move as it will open certain PSUs to more private competition and consolidate this space. While this is a positive for a long-term growth prospect of PSUs, they could underperform in near term due to overall economic slowdown. Now, these factors sums up as to how an investor must pick a PSU stock for their portfolio. Investors should surely allocate some percentage of their portfolio towards PSUs since they are under government's umbrella and are important for growth of our economy. Thank you.